So, hey folks, Bob Ferguson here. And I have with me Ron Doetch. Ron and I met each other in Chicago last year at the Triata, or last week rather, at the Triata conference. And I posed to him, once I found out who he was and what he did, what we were trying to do with the food web. And what I mentioned was that I thought that we had the offtake taken care of with Hy-Vee and Cap City being willing to buy kind of an elastic amount, a substantial amount, and we had a potential place to aggregate. But what I was puzzling over is how do we supply it? Who would want to buy? Who would want to grow in order to sell? So we'd have something to sell. So Ron gave me more of his background, and then he provided some key insights of how we might do that. So that's why I invited him to come on today with me, and also invited him to come on the 12th when we meet for our whiteboard session. So Ron, thank you very much for being with me today.
Oh, you're most welcome, Bob. It's a pleasure to be here. Thank you.
That's great. So let's go over a little bit about your background so people can understand that you pretty much know what you're talking about in this arena.
Okay, well, I was born and raised on a working dairy farm in northern Illinois, and it was those dairy cows that convinced me to go to college. And I went to college so I wouldn't have to milk cows or farm anymore. So when I got out of college, I immediately went right back into agriculture. And shortly thereafter, I got picked up by a machinery company by the name of John Deere. And I played around with them until we got into the 80s. And when we got into the 1980s, there wasn't much money at the farm gate. Farmers were going broke. In Iowa, we were having the penny sales where the neighbors were coming in and betting a penny and then giving the machinery back to the farmer. A lot of farmers lost their life. It was a terrible time. John Deere had decided at that time they were going to cut the number of dealerships in the state of Illinois by 50% in 12 months. I tendered my notice and went on with life. So by 1995, I was living back in northern Illinois, closer to the farm, but not getting sucked back into it. And I was still battling this problem of profitability at the farm. And in 1995, corn was a little over $3. It looked like a pretty good price, but I really thought corn and beans were a problem. And so I said, how about we grow oats and cover crops in the corn soybean rotation, and we get more profitable with both of those. I put together a little project and I got Quaker Oats to commit to buying the oats, and we got farmers basically in 4 states to produce oats, and we had a lot of fun with that. So by 1996, I was pretty visible out here promoting small grains and cover crops to enhance profitability of corn and soybeans. And so Toshu, at that time, a Japanese trading firm, was looking to put a major push on grain origination in the Midwest. And they had purchased Consolidated Grain and Barge with 26 river terminals. They hired me to help them implement what they called Phase 2 Origination Plan. So they got all the hard bricks and mortar to buy grain. Now they needed to figure out ways to get farmers to sell them grain. So I worked for them about 6 months in 96 until I figured out that my job was to write the Phase 2 Origination Plan and then implement Phase 2 Origination Plan. And so we had to convince farmers in the Midwest, Iowa, Illinois, Ohio, Indiana, Ontario, Michigan, Wisconsin, Minnesota, and up into the Red River Valley. We originated hundreds of thousands of tons of different grains. And we wanted to have a system of integrity that was far and away above every other trader's grain. We wanted to ensure that mad cow disease wouldn't hit the Japanese people. And in about 1998, the Starlink trade in corn came out. It was an unapproved GMO event. and it turned out that it caused people who had allergies to be allergic to the corn. And so there were 366,000 acres in the United States, and the Japanese buyers said they would put any of us in jail if they found any Starlink in our corn. So we didn't hear much about that problem in the US, but I went to Japan several times to talk to different people about the issue and the problem. So we had put together a system to have assurances of quality in the grain, and it turned out that we had to implement the system for safety in the grain, not for quality. But we learned a lot, and we put a lot of systems together. We wrote a lot of different contracts. We figured out different ways to get farmers to make more money so they would participate in our programs. Like on the upper Mississippi River, we guaranteed them a basis so that they didn't have to float in the market on the basis market, and they knew how much money they were going to make if they grew our grain for whatever reason. But without going into that a whole lot, that got pretty crazy after Starlink, and I left there in 2002. And in 2003, the board of the Michael Fields Ag Institute, which is at that time a 25-year-old ag research, outreach, and education institute. It was around organic and sustainable ag. I took over as executive director there in 2003. So as the executive director, I was overseeing our stewardship of about 1,000 acres of farmland. We had about 50 acres of vegetable production. We ran a large CSA. We sold wheatgrass. We delivered products into Whole Foods in Chicago, 11 different stores. We had a lot of things moving, and almost nothing made money. So we were a 501c3. We operated a lot on grant money. So a lot of things were theoretical and warm fuzzies, and a lot of things just simply didn't make money. So in about 2005, I made a major push into Milwaukee because there was an urban base of people there large enough that we could get involved in the real food system, feeding tens of thousands of people a day. So we helped promote the Milwaukee Public Market. It was a $10 million building. We were the first store to sign a contract in the Milwaukee Public Market. There were 20,000 customers coming to the store a week. And so we had a lot of time to experiment with theory. And because we were operating in theory and not in practical experience, we dropped $300,000 very quickly. And we were just bleeding red ink. So we had to figure out how to make it work. We had to figure out how to swim, or we were going to drown in debt in the public market. So we really took a hard look at the things that cost us money, the things that made us money, and where we could cut back on labor. We wanted to provide jobs. One of the problems I had with my staff was they said, hey, we're doing all this to provide jobs for people, and now you want us to cut back on labor. Like, no, we got to find that middle ground where we have the right amount of labor that we can afford. So we went through a lot of that. And so as executive director of Michael Fields, I started a project with W.K. Kellogg Foundation called Scaling Up a Local Regional Food System. What would it take? What would it look like to scale up local food in the greater Chicagoland area? And then we partnered with Rich Pirog at the Leopold Center, and we looked at a 6-state area, and what that scaling up would look like. What would it take for infrastructure? How many buyers we would need? What would the production look like on the ground in terms of the size of acreage? And it was really daunting without getting into details of the study. And I know we've talked about Ken Meter's study. That was a 10-year study. It almost coincided with our scaling up project exactly. It also was funded by the W.K. Kellogg Foundation, Ken was finding that nobody was making any money farming while we were identifying the barriers to entry to get into fresh market fruits and vegetables. So Ken and I ended up at a lot of conferences together, um, given different chats. So I stayed there with Michael Fields for 7 years because by the fifth year at Michael Fields, I got a call every week, literally every week. A landowner called me and said, "What can I do with my farm? My tenant says he doesn't make any money. We're growing corn and beans. We're doing the best we can. He can't pay any more rent. The rent's not that attractive, but it's all the tenant says he can afford to pay. What do I do with the farm?" And another landowner would call me and say, "I'm so disappointed in my tenant. I called my tenant. I said, I don't want you to grow any more GMO corn. I don't want any GMO corn on my farm." And he said, "If I'm going to pay you rent, I'm going to grow GMO corn." She's like, "I can't talk to that man. Help me out." So I just had call after call, and I tried to convince the board of directors that we should go into some kind of whole system farm planning. And of course, the staff said, "Well, that isn't what we've been doing for 25 years. That isn't what we do." So uh, I like to be on the leading edge, and the leading edge says we need to be doing farm planning. So as I looked at this proposition more, Bob, I realized that our universities, our farm managers, our supply companies, everybody's trying to push things through the farm. We're trying to push inputs through the farm. We loan a farm money, we try to push our knowledge into the farm, but it's all push through. And then on the other end, we have ADM and Cargill and other companies that are buyers, and like Hy-Vee on the produce and Walmart and Whole Foods. They're trying to pull things through the farm. My Japanese buyers are saying, "Can you cut soybeans 6 inches off the ground so they won't have dirt?" Like, no, they won't cut them 6 inches off the ground, and that's not where the dirt comes from anyway. So uh, it just became apparent that nobody was landing with the farm at the farm level and saying, "Okay, what watershed are you on? How does that watershed impact your farm? How does my farm impact the watershed downstream? We're all connected by water." And I've had some pushback on this, but literally all farms are on a watershed of some kind. And so I left Michael Fields, me and another gentleman started a company called Solutions in the Land, because it doesn't matter if you want farm profitability increased, the solution's at the farm. If you want to eliminate type 2 diabetes in teenagers, the solution is in the land, it's in the food. And so for flood mitigation, why does Cedar Rapids flood every spring? Because all the farmers on the Cedar River have tiled out their fields, and that 21,000 square mile watershed gathers up tile water in the spring and just overwhelms Cedar Rapids. And I know the mayor told me one time that, well, 2008, that was a 100-year flood. I said, "Mr. Mayor, when you flood every year, it's no longer a 100-year flood. It's called an annual flood." So um, we realized, my partner and I, that we needed to figure out, how do you do a 360 on the farm? How do you look at the farm? And so we started studying the ASTM codes for doing environmental site assessments on rural farms. And that was somewhat of a roadmap in terms of safety. But then there's the marketing piece, and then there's the farm policy, all the farm programs. There's the highway system. Dwight David Eisenhower dictated where a lot of farms can sell to by where they put the interstates. It turns out that trucks delivering food like to use the interstates, and when they're doing a backhaul, they like to pick up close to that interstate. So if you want to get on a truck, you want to be close to the interstate. And we've all seen it. We've seen it with access to export markets. And, if you have Are you on the corridor down the center of Illinois where Fultz Trucking runs every day hauling non-GMO beans? They go to Cargill. You can get your wheat back hauled to Minnesota for almost nothing. And so we said we need, every farm is a microclimate. Every farm is unique in and of itself. And so we want to land right on the farm and understand the farm. We want to understand the ownership structure, and we want to write a plan for that farm to lower the risk of the farm and increase the profitability. And we've been doing that since 2011. We weren't sure how to launch our company, and somebody came along and said, "Hey, I have a farm. Why don't you do a plan on it?" And that was in 2011, and we've been busy ever since. And so we still haven't gotten around to launching the company or advertising. Everything's been word of mouth, and we never seem to run out of farms to do a plan for. So we probably do 35, 40 plans a year. And we've been doing that since 2011. And we've found ourselves working more with land conservancies, and there's the Natural Land Institute in Illinois. In Iowa is the Iowa National Heritage Foundation. We've done projects with both of those. We've worked with planning firms doing comprehensive county plans for 2050 and beyond. We've done a couple in Iowa. So we're kind of constantly in the trenches. What makes us uniquely different is we start at the market, and we ask the market what it wants to buy. In 1996, when I got growers to grow oats, before I ever proposed that to a grower, I got a contract with Quaker to deliver those oats at a set price and set delivery dates. So I've found that if we start at the market and understand the value that the market's willing to pay, and when the market specifically wants that lot size delivered. And I say this all the time, that lot sizing and just-in-time delivery almost always pay more than what the crop pays. And so if you're not doing lot sizing and just-in-time delivery, you're leaving half or more of your money on the table. And so if we're going to put together profitability at the farm gate, we need to understand what we can do at the farm and what we can't do, and what it's best to partner with somebody else and let them do. So it does mean oftentimes moving up a little bit on the value, on the supply chain. I and a lot of others now call them value chains instead of supply chains, because every link you go up on that value chain, you receive more value. One farmer told me, "Don't tell me about value-added agriculture. I take all the weather risk. I take all the production risk. I grow the best corn in the world. When I harvest that corn is the best it can be." And I said, "Yeah, but I'm sorry, Mr. Farmer, but you're getting 5-6 cents a pound for that corn, and I can charge 10 cents just to put your corn in a bag. And I don't have to worry about the weather to put your corn in a bag." So in terms of fresh market vegetable production, since 2003, I've been aware that the supply is far less than what the buyers want to buy in the Midwest. And this has become quite an old story. Bob Skaman was with Goodness Greenness in Englewood, down the south side of Chicago. He said, "I can buy 26 million pounds." When I was at Michael Fields, he said, "I can buy 26 million pounds of fresh market produce a year. You guys produce all you can for me, and it won't be nearly enough." And that situation really hasn't changed much from 2010, when I left Michael Fields, to where it is now 14 years later. Somebody asked me the other day, how long does it take for change to occur in agriculture? And I'm living cycles here that are about 20 years in length. From about 20 years after we introduced cover crops and small grains and corn, soy, now we have in counties like Jefferson, 15% doing that, which is a big number in agriculture. When you get 15% of farmers doing something, it's a topic at the coffee shop. So the one we've supplied the market for export corn. We have supplied all of the corn that my previous company wanted, all of the corn for acai beer, all the beans for tofu and natto and miso. Those markets have all been satisfied. The corn, we did 20% of the high oil corn produced in the United States. That market was never good for the farmers. Farmers didn't make any money on the high oil corn program. That program was to feed chickens, and that was chickens sold that had 100% vegetable diet. So markets come and markets go. Typically, markets come and they're going to be on the high side because they're trying to pull products into them. As a market matures, the price and the margin go down always. Once it becomes a commodity, it's a race to the bottom. As long as your product is uniquely known in the market, it will retain its value. And I have a whole presentation on how to maintain value in a value chain. But basically, when you have the farm identified, the value degradation occurs over a long period of time. If you're not very differentiated in the market, your value may go away in just 1 year, as quickly as 1 year. Very few things go away that fast. People tried to get canola going in the United States. The barley business has moved to the arid states where it doesn't rain because you get fusarium in barley. Cranberries are grown where they can flood the fields and harvest them mechanically. You don't need flooded areas to grow cranberries. You can grow cranberries anywhere. It just takes a lot of labor to harvest them unless you can flood the cranberries and beat them off. So the Cranberry Growers Association control every acre of cranberries that are grown every year, because back in the 40s, they almost went broke because too many people produced cranberries and the bottom went out of the market. So the cranberry growers have said, we're never going to let that happen again. So there's not market in cranberries, but almost every other fruit and vegetable, there is really good opportunity. There'll probably be opportunity for the next 10, 15 years at a minimum. There's a couple things that could erode the profitability. One is already happening, and that is as the farmers run out of water in California, and as the farmers have these wildfires, and as these rents in California go higher than 15,000 an irrigated acre per year, when those California farmers discover the Midwest, they're like, you mean I can give you 15,000 and own the acre forever? They're amazed. So one of the things that is happening is some California farmers have been buying land in the Midwest. They like the Mississippi River. They like land adjacent to the Mississippi because they've never grown a crop without irrigation. And so they've got to learn how to grow crops without irrigation, which we can do. Some crops, and some crops we're still going to need a little trickle of water to keep them going. But it's going to take a long time before the California growers pose a threat in the market. And the other would just be if farmers switch large acres of corn to grow large acres of vegetables. So what's keeping that from happening? And Bob, you have a garden, you know this. I tell everybody, every type of plant you grow, whether it's a tomato, potato, pepper, eggplant, each one of those are uniquely different. And you need to know each plant type as well as you know each of your children. And so you want to grow 100 crops? I hope you can become acquainted quickly with 100 children and know what they're going to do and how they're going to behave. And it will take a fair amount of time just with tomatoes, getting in sync with the varieties that your farm will grow and make you money. So Today, I'm completely independent. Um, I work with Solutions in the Land. We maintain a network of consultants who we bring in if a farm plan calls for a prescribed grazing plan. I have two specialists I can call that come in and write our grazing plan, and the NRCS will sign right off on their plans. The way they write plans have been pre-approved by the NRCS, so that always works out well. We don't try to be everything to everybody, but we try to get everything captured at the farm level so that we can reduce the risk in the future for that farm and increase the profitability.
So
I
Ron,
also,
I got a question.
yep,
So given this background, and when I posed the scenario that Cap City and Hy-Vee need a lot of produce, well, you said everyone needs a lot of produce, as you pointed out, that produce is just something that is not nearly as available. Both of those organizations told me we need more. So, what is it about your particular understanding and what you can do for farmers? Because we want to set up a simple system to begin with. We want to grow some things, aggregate them, get them into Hy-Vee and Cap City at a profit. So, when you started to talk to me about, okay, here are some of the strategies to do that, we don't necessarily need to go into the details, but what I think the folks who are listening to this are going to want to know, is there a practical way and maybe some top line things of strategies that we would employ in order to utilize current farmers? How would we set this thing up so that we can produce enough to make the whole system go and make farmers money? And also the idea of, if you raise corn or beans, you get paid one time a year. If you raise vegetables, you can get paid and you own the crop. So just let's talk to a few minutes about that.
so you bring up a really good point of what can we do at the farm level to ensure profitability. We don't want the farm engagement into the produce business to be an investment of hard dollars. We want it to go to profitability. It's not going to be the main source of income for the farm, but it will paint what the future can be for the farm. So it needs to be looked at in that manner. What we do want the farm to invest in is invest in the relationship to the market, the relationship to the pack house, and probably the relationship to the pack house is more important. But let's say that we established a 100,000 acre base in Fairfield, and next year Hy-Vee or others thought they're going to be short of bell peppers. They might want the farmers to shift their production from one crop and plant more acres of another crop. And so we want the buyer to take the risk on what they ask us to produce. And if we have a really good crop year, we want the buyer to take that risk and take everything we produced and push it into the market, because they can do that. They're in a position to. We can't in production. So my advice, my best knowledge is to move slow at a steady pace and be successful, and then move on and introduce more crops. Start with one crop, start with two crops, start with two crops that don't harvest at the same time, start with two crops that don't require refrigeration. We don't have to get to the pack house quite as quickly that way. We can at what the farm has available, whether there's still an old milk house on the site, or what kind of a washing area do we have or don't have. Um, just kind of move into the production and then let form follow function. And by that I mean, if you're 2 miles from the pack house, I wouldn't be looking for refrigeration or probably even at a wash area. Just take it to the pack house from the field. If you're 10 miles, it might be that you have a washing station, which wouldn't look much different than what you set up to wash equipment with. Um, and then maybe it goes to the pack house there. If we're washed, if we're chilled, we can box, and for every additional step we do at the farm, we'll receive additional value. But it's not important. Starting in the produce business, it's not important to capture all the value segments in the supply chain. The important thing is to be successful, be comfortable, manage your risk, and don't lose money. You just incrementally get it going and find out where the values are at, find out where you're comfortable with. I like to say, you invest in that new John Deere tractor. That's a big dollar investment, but it's an investment you can justify and labor savings. And, when I worked for John Deere, we said, well, hey, Mr. Farmer, it doesn't matter what you pay, because with a John Deere, you're going to get more for it than what you paid for it. That's the way it always works. So it's not an investment, it's a gold mine. So, but you invest in that. You need to invest a little bit into the market. Invest into the market relationship. Listen to what the buyer wants. Listen to what the buyer needs. It's so overlooked to get to know the buyer. I'll tell you one quick story. I went into Zingerman's. They're probably 25, 30 years old now in Ann Arbor, Michigan. All of their stuff is local. All their proteins are local. They are a local restaurant. They did 20 million in business last year. Their head chef is named Alex. I walked in one night to the restaurant, and oh, by the way, the owner pours the water in the evening. He goes around in an apron quietly and pours people's water, and he gets to hear table talk, and he knows what adjustments to make in the restaurant. He's well informed. So I asked Alex, I said, Alex, you've been in this business 20, 25 years now. You're highly successful. What is it that you would like to buy locally that you don't get? And he immediately said, in 20 years, you're the first person that has ever asked me that question. And so he said, it's celery. This region used to produce a lot of celery. None of my local farms will produce celery. They tell me they don't use it in their CSA boxes. They don't grow it. I've been asking farmers to grow me celery. Nobody will grow me celery. I went back a couple months later and I took a grocery bag full of celery out of our garden. We have 6.5 acres that we produce mainly for my benefit of doing different trials with. I went in, they seated us in Zingerman's. I'm sitting in the booth. I have this grocery brown bag full of celery sitting next to me. And Alex came out of the kitchen and he said, I smell celery in the restaurant. So I think, getting to know the buyer and knowing what they want, when they want it, what story is there about my farm that will enhance the product you're selling? We've got Alex now doing whole grain wheat soups in the fall. They're a great soup recipe. As you know, Bob, I started out a lot in small grains, wheat, barley. I still fool around with some making quality wheats today. I wanted some of these small grains to find their way in with the produce as well. And it turns out that some of these bakeries can use a fair amount of wheat, but they don't want that soft winter wheat. They want hard red winter wheat. And most of the soft wheats that are grown in the Midwest just go for feed or go to export. They don't go for baking. So there is an opportunity. I work with several alcohol companies making alcohol out of small grains, but I can tell you that's a very limited market. The specialty grain markets today are very limited. Not many farmers can participate because they've already got their sources. But produce, fruits and vegetables, wide open.
Okay, so finally, what does this mean for this area? If we were going to have a model would we train farmers to do this, or would we go to farmers who already know how to farm and have them diversify, have them enjoy doing 30 or 40 or 50 acres of this or that, or 100 acres? How do we do that?
So the reason I was asking about Iowa economic development and other sources that might want to fund some community economic development activities is I propose that we find farmers that want to diversify risk, farmers that want to build their farm for the future, look at produce production, and let's put together a comprehensive program where we'll get the buyer to write a contract for them that will be user friendly and it will be executable. We'll provide the information for the production, and then we'll mentor them. And it's the mentoring that I would need some consideration for down the road. That can get pretty intense, but they know how to run farm equipment. They know when soil's wet. They know when soil's ready to work. They know most everything they need to know, but the things they don't know, they need to have a coach when they need that information. So if you go out in the squash field and the crop's going south, we got to do something about it. And so I have a lot of different production strategies to help with those risks. We use a lot of diatomaceous earth. Diatomaceous earth is expensive locally, and it's so effective and can be used so many ways for so many things. I buy it by the semi trailer out of the mines in Nevada. And my biggest expense for diatomaceous earth is the freight to get it here. But in Florida, in the orange groves, uh, I've got a grove in Florida that we put down 5 pounds of diatomaceous earth per acre per year, which is about $2.50 worth. And we haven't used insecticides for 5 years in orange productions in Florida. So we can take care of most insect problems with diatomaceous earth. There's tricks to the trade. There's tricks to every aspect about growing veggies. And Bob, you and I didn't have this conversation, but I just thought of this. When I first started working in Michigan, farmers wouldn't talk to me. They would not tell me their tricks to the trade. Michigan is so paranoid about other states, other farms gobbling up their market, and they just wouldn't talk to me. And I've had projects in Michigan now for 15 years. I just spent 3 years on a project on the Huron River around Ann Arbor. But I've got blueberry farmers I've been working with for 10 years. Finally, I'm one of the boys. I'm one of the they'll they'll share information with me, things that they do, like um, mechanically picking blueberries and then getting the hand picked ones out with the color sorter. Uh, there's tricks in everything you grow. There are little tricks that farmers have come up with to make the crop reliable and profitable. And use of cover crops, crop rotations, um, like some plants like to grow next to others. Some people think tomatoes like to grow next to uh, think of it here, the stinky weed. I'll think of it here in a minute. But some people think they want to grow them by fennel, but the truth of the matter is nobody likes to grow near fennel. So you put your fennel where in the deer path, because the deer won't walk past fennel. So it's all of these crops. Like I say, you need to know each one of them like you know your own kids. And I think, depending on the situation, there's some specialty equipment that should be capitalized at some point, but it's not like every farm has to have one.
Yeah.
It's, because produce has different windows of when it's put in and when it's weeded and that sort of thing. It's much easier to share equipment in produce production than it is corn and bean production. Because in
Right.
corn and beans, everybody wants to plant around the same day, right? Because if my neighbor's out planting, I'm going to be out planting too. But in produce, it's not that way. And it's not a problem to share equipment. I was in Europe in 2002. And as I went farm to farm in Germany, the village was kind of the center for a lot of the farm equipment. And all of the farmers shared in major ticket items. Planting equipment, harvesting equipment generally was owned by the community, and everyone shared in that. That was, I think you're that age, Bob. I think you and I were both raised in a time when that was common for farmers to share equipment. But we got away from that a long time ago, and that we could talk all day just about that. The fact is, in the produce business, like an undercutter is a really important tool. Not everyone needs an undercutter. It's not a high ticket item. It's just an item that you don't use but a few times a year. We're looking right now at a cabbage harvester. A cabbage harvester should be shared equipment. Green bean pickers should be shared equipment. And picking green beans are a chore. They're a chore in the family garden, but when you scale up and you're selling wholesale, bean picking's a problem. So we got potato diggers. Potato diggers will dig the garlic. Garlic has been a good crop year in, year out for the last 10, 15 years. It's always going to probably be a good crop because most farmers don't like to grow garlic. You have to plant it in the fall. You harvest it in July. It's when the family's taking vacation. It's not convenient. A number of reasons, but garlic is kind of underserved as a crop. Onions, not the same. Onions are a storage item. Potatoes, you can harvest 400,000 pounds of potatoes per acre, unless you have an ozone generator, a humidifier, a big potato digger, and farm on sand, because potatoes don't grow good in clay and they don't grow good in fertile soil. They like to grow in sand. So central Wisconsin does a good job with the potatoes. Red River Valley does a good job with potatoes. This heavy corn, soybean ground, I wouldn't waste my time with potatoes except to feed the family if I even did it for that.
Okay, well, this has certainly given us a lot of food for thought, and I appreciate your time, Ron, and I appreciate your expertise.